Bullish sentiment sparked by Fed Chair Jay Powell signaling the time has come for monetary easing, tempered this morning by rising tensions in the Middle East. The French President Emmanuel Macron is due to meet the national rallies Jordan Bardella and Marine Le Pen today. This is, he figures out how he's going to name a new prime minister. Plus, in just a moment, we're going to speak to the IFO president, Clemens Fuest, on Germany's business outlook. The country's PMIs missed across the board last week. What is this data going to tell us? It is a quiet morning, a quiet start to the week this Monday. The reason for that, in so many ways, London is out. It is a holiday here in the UK, and as a result of which, you are seeing very light volume across the board today for pretty much every other market here in Europe. At the moment, you are seeing S&P futures absolutely flat. You're not really getting a steer yet in terms of what is happening. In terms of equities broadly across the board, we are absolutely flat. Brent creeping up a little bit. We're up by 1% at the moment. The reason for that, rising tensions in the Middle East being priced in to what we're seeing with the crude price. We are also getting data out of Germany. We're going to break now the IFO numbers. The August IFO Business Confidence Index at 86.6. The estimate there, 86 even, so slightly better at a headline level. But the data recently out of Germany has been fairly shocking. We'll get an update in just a moment. In fact, let's get to that. Let's kick things off.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning. Welcome. You are watching The Pulse. I'm Guy Johnson in London. Francine Lacqua is off today. It's a Monday morning where we've got a UK holiday, plus also maybe a pause for reflection. We obviously had a great deal to think about come Friday. It was a big moment. We had the Jackson Hole speech from Jay Powell that the market had been keenly anticipating. Let's take a listen to what he had to say.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. While the task is not complete, we have made a good deal of progress toward that outcome. My confidence has grown that inflation is on a sustainable path back to 2%. Today, the labor market has cooled considerably from its formerly overheated state. The cooling in labor market conditions is unmistakable. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
That was the Fed chair, of course, Jerome Powell, speaking at Jackson Hole, signaling cuts are coming from the Federal Reserve, from the FOMC. What was interesting, actually, was that European policymakers were actually a little bit more cautious, concerned maybe that we are seeing inflation remaining stickier than anticipated, despite actually the underlying economic data pointing to weakness. I point you in the direction of the PMI that we saw last week. Let's add to that now. We've got the IFO confidence data coming out. The headline number, the business confidence index at 86.6. The estimate was 86. These are not good numbers. This is still signaling an economy that is facing tough times right now. In terms of the current assessment, 86.5. Bang in line with estimates. Clemens Fuest, president of the IFO Institute, joining us now. Nice to speak with you this morning. What does the data tell us about where the German economy is right now?
Good morning. Yes, the German economy has been stuck in stagnation for some time, and this is getting worse. That's what the data is telling. What's been of particular concern is manufacturing, and in manufacturing we have a rather bad reading. This is coming in particular from investment good producers, suggesting that the weakness in investment, in corporate investment we've seen for some time is continuing, and this is now also affecting the service sector as far as it is related to manufacturing, for instance, transport and logistics. So overall, this tells us that the stagnation is continuing, or that the German economy is even getting deeper into stagnation.
Yeah. Clemens, would this be resolved if we were to see interest rates, significant interest rate cuts from the ECB? Are the problems we're seeing in German manufacturing cost of money related?
The interest rates cut, at least the September cut, is already priced in markets. So it's unlikely to make a big difference. I mean, what would make a difference in a bad way would be if this cut didn't come. But it's been priced in, so that alone, I'm afraid, won't help the German economy. I think what we are observing is really structural issues with respect to German manufacturing, the automobile industry, the focus on the combustion engine, the still relatively high energy prices, although they have been declining somewhat, and the fact that German used to be successful in exporting and now much less so. Normally, the German economy is helped by its exports, but this time this doesn't seem to be happening.
Are you surprised, therefore, that the German representatives at the ECB are more cautious when it comes to cutting interest rates? Is that the wrong call, do you believe?
Well, it is not the job, at least in theory, of the German representatives to be representing German interests, but the interest of the German economy is certainly an interest rate cut, more so than the rest of the Eurozone, because the German economy this time is lagging behind the economy of the Eurozone. But the appropriate stance for the Eurozone as a whole is maybe to be a little bit more cautious. Yes, we are seeing strong wage increases. We are seeing them, by the way, in Germany, too. The trouble is that German consumers seem to lack the confidence to spend this money. But I think overall, this stands to be cautious with interest rate cuts, at least with announcing more cuts, is justified.
What does the German economy need right now? How do we revitalize the German economy? You talk about the fact that there are structural problems. What needs to happen at this point from a policy prescription point of view to start to turn things around?
I think we need a boost of confidence of consumers and investors, and that requires a policy shift. We now have the impression that German economic policy is stuck somehow. The German government is divided. They have come up with a plan to revitalize the economy that is going into the right direction, but the steps taken are too small. I think we need much better investment, stronger investment incentives, tax reform. We need reforms to support labor supply, but I would say it's mostly about structural reforms. Of course, falling interest rates, a more expansionary monetary policy stance would also help. It would help in particular construction, I believe. But these are really structural issues. So we need a combination of structural reforms and the loosening of monetary policy.
We're seeing a tick up in energy costs, particularly gas costs recently. If that continues, how big an impact do you think that will make on your data as we go through the winter?
What we are seeing now is that the energy-intensive industries are recovering, albeit from a very low level. Now, if gas costs and energy costs increased again, of course, that would end this recovery. Energy-intensive industries are approximately 15% of the overall manufacturing sector in Germany, so that is not too large, but of course, rising energy prices would add to the troubles. They would also make interest rate cuts more difficult for the ECB, of course, because they would bring up inflation.
OK, so we need to keep an eye on what's happening with the energy story. It's not a huge effect, but it is an effect. When I think about what is happening with the German economy, my mind instantly turns to what is happening with the Chinese economy. If we were to see how big an impact is what is happening in China having into your data? How clear a connection, how big a correlation are we seeing between one and the other? We're waiting for a turnaround in China. If that doesn't come, do we see a turnaround in the German data regardless?
Well, traditionally, we would have seen a turnaround, but there are two issues. One is the relative overall weakness of German exports to China, and then there's the particular issue of the automotive industry. The Chinese car market used to be a booster, really, for German car companies, but now in China, the share of electric vehicles is increasing very rapidly, and the strength of German manufacturers is more in the combustion engine area, and that is felt now. So a turnaround in China would be welcome, but it may help the German economy less than it used to.
Clemens, how exposed is the German economy right now to a trade war with China or potentially a trade war with the United States? How big a risk is it? What are those you're talking to telling you?
Well, at the moment, there is this risk of an escalation of the trade war due to the tariffs on electric vehicles imported from China. Now, so far, the Chinese response has been very moderated, focusing on dairy products. So I think in the short term, the risk is not too large. But more generally, there is, of course, the risk that due to the geopolitical situation, trade with China will become more difficult. Of course, the U.S. is now the more important trade partner. And under a potential Trump presidency, there would be the risk of trade conflicts. At the same time, Trump is expected to cut taxes and boost domestic demand. And this may, to some extent, offset potential tariffs. So overall, I wouldn't be too worried about a decline in exports after Trump becomes president, if he wins. But of course, he's very hard to predict. So that alone, the uncertainty involved is, would add to the problems of the German export industry.
Clemens, let's wrap this up. What is your message to the ECB? What is this data telling the ECB about what needs to happen next and how aggressively they need to lower interest rates?
Well, clearly, this is supporting the case for cutting interest rates. Of course, the ECB doesn't only make economic monetary policy for Germany, but for the Eurozone as a whole. But clearly, this is an argument to cut rates in September.
And the message to Olaf Scholz?
Well, we need structural reforms. We need reforms to reduce the tax burden on investment, to reduce the regulatory burden on investment in Germany. And we need reforms to boost labor supply because the lack of labor supply is just another impediment to investment in Germany.
Clemens, it's always a pleasure to speak with you. Thank you very much, as ever, for walking us through the data instantly as it drops onto our screens here at Bloomberg. Clemens Fuest, the president of the IFO Institute, one of the German economic institutes. Great to get his take on that data so quickly after we see those numbers dropping. What are we going to talk about next? The Telegram company, the company behind Telegram, questioning the detention of its CEO, Pavel Durov, in France. We'll take you to France next for the latest on this story and get an update on what is happening there. This is Bloomberg. 15 minutes past the hour. Welcome back. You are watching The Pulse. I'm Guy Johnson in London, in for Francine Lacqua. The company behind Telegram has questioned the grounds for France's detention of its CEO, Pavel Durov, the messaging app's billionaire co-founder, who was taken into custody at a Paris airport, Le Bourget, over the weekend. Let's get more now. Bloomberg's Gaspar Surbach joins us from Paris. Walk us through what happened. How was he detained? Where was he detained?
Good morning. Yes, it's been quite an action-packed weekend here in Paris. It's been quite sleepy since the Olympics closed, but on Saturday night, around 7 p.m. local time at the Le Bourget airport, Pavel Durov was stepping out of his private jet on arrival to Paris and detained for questioning here. Quite a surprise to everyone, really. The man was detained for an initial 24 hours, and that was then extended. That's what we've started to hear from here, and everyone is very much looking forward to hearing what are the next steps.
So what is the case against him?
What he seems to be accused of is that he is basically not moderating Telegram. He has not taken steps to prevent certain serious crimes from basically being aided and abetted by his platform. That, for the moment, everything is happening behind closed doors. We don't know exactly what the accusations are. We don't even know whether he's actually going to be charged. He may be released at the end. But that's the picture that's emerging for the moment. is that, he should be doing much more to prevent the very serious crimes like, drug trafficking or possibly, apology of terrorism from happening on his platform.
How long can he be held for? What are the next steps here?
So, like I said, 24 hours is the mandatory, detention. That detention has already been extended. He talked to an investigative judge on Sunday evening who extended that period. It seems it would be 96 hours for the moment. So, still quite a bit of questioning for him. The strategy of the investigative judge must be to try to soften him. He's probably going to alternate moments where he's going to be faced with the investigative judge for questioning, faced with policemen for questioning, and back in his cell to meditate, I guess. And at the outset of the process, there's basically two options for the investigative judge. He can either press charges, and then we'll know much more what the case against Durov is, or he could decide to give Durov this intermediate status, which is called material witness, and then Durov would be essentially released. He would be allowed to leave the territory, and he would also have access to the document underpinning the investigation, so he'd be better able to understand why he ended up being detained for 24, 48, 72, or 96 hours.
In terms of the sort of surprise factor around all of this, clearly there's some surprise that he's been arrested. What surprised me, though, was that the Russians were pushing back as strongly as they were over the weekend regarding this arrest. My understanding was that he'd already fled Russia, and therefore I find it surprising that the Russians would be trying to take his side. Is this Russia concerned for his legal position, or is this Russia just trying to score points off France?
I might opt for the latter. I think the French criminal authorities in the past have shown they're never shy to go after big international cases. And I think it's only expected to see that the Russians consider this some outreach, some power play. The French obviously will say, no, this has nothing to do with anything political. This is purely judicial. We've seen the French have been quite aggressive in, like I said, in international cases. They've gone after the sons and daughters of African leaders who have bought mansions in France, essentially money laundering cases. They've gone after, in the past, another Russian called Alexander Vinnik, who was accused of cyber extortion. I'm not too surprised of that pushback, to be frank. It's tit for tat.
Gaspar, thank you very much indeed. Gaspar Surbach joining us on the latest surrounding this case. We'll continue to keep you updated. Staying in France, what we're going to talk about next is the formation of the next government. The President, Emmanuel Macron, meeting again his political rivals today, trying to figure out who could be the next Prime Minister? What does the government look like? We've had a little hiatus for the Olympics. We're now back to business. We'll talk about that next. This is Bloomberg. So the French President Emmanuel Macron meeting again with political rivals and delegations today in a bid to form a government. That's after snap elections, remember, back in July, left him with a hostile National Assembly that he has no majority in. Let's get the latest from Bloomberg's Caroline Conan in Paris. Caroline, we saw talks on Friday. How much progress was made there? What should we expect today?
Today, Emmanuel Macron is continuing the discussions first with the President of the National Assembly this morning, later this afternoon, the President of the Senate, and in between, the leaders of the far-right National Rally, Marine Le Pen and Jordan Bardella, separate meeting also with Éric Ciotti, remember the President of the Republicans who had split from the Republicans in order to join the far-right. As you know, the far-right came third in those snap elections last month, so clearly the goal of these meetings today is not for Emmanuel Macron to name a far-right prime minister, something he's not going to do, but to actually understand what kind of vote of no confidence someone else could potentially face, because the National Rally actually has got 143 seats in parliament, which is pretty big. Now, on Friday, Macron met with Lucie Castet from the New Popular Front, the left-wing coalition, which came first in those snap elections. She's 37-year-old. She is an economic advisor to the Paris mayor, Anne Hidalgo. She initially said on Friday that she will have to name a few far-left LFI ministers within her government if she was named prime minister. But then on Saturday, Jean-Luc Mélenchon, the far-left leader, actually said this wasn't a prerequisite. Perhaps he would support the Lucie Castet government as long as they implement the program. So perhaps Emmanuel Macron here is going to be caught in his own trap.
Feels like this could take a while. Caroline Cardin in Paris, thank you very much indeed. Up next, we're going to talk about the oil price and the geopolitical impacts of the attacks we saw over the weekend in Lebanon. That's next. This is Bloomberg. We're approaching half past the hour. Good morning. Welcome. You are watching The Pulse. I'm Guy Johnson in London, in for Francine Lacqua. Let me update you on our top stories. Bullish sentiment sparked by Fed Chair Jay Powell signaling the time has come for monetary easing, being tempered a little this morning by rising tensions in the Middle East. We'll get to that in a moment. The French President Emmanuel Macron is due to meet the national rallies, Jordan Bardella and Marine Le Pen, this morning. This is he tries to figure out how he's going to name a new prime minister. And Germany's IFO survey of business confidence falls less than expected in August, but the IFO Institute president telling Bloomberg that the economic stagnation in that country looks set to worsen. OK, let's turn to the geopolitics and the economic impact that it's having this morning. A relative calm holding in the Middle East after Israel's Sunday bombing raids in southern Lebanon. Israel says it hit thousands of Hezbollah missile launchers. Based on intelligence that the Lebanese-based militant group is planning imminent attacks on Israel.
We follow Hezbollah for weeks with technological means and air patrols by Air Force planes. At the moment, we detected an intention on the part of Hezbollah to carry out the attack, and we eliminated most of them.
Both Israel and Hezbollah have announced that for the moment their operations are over despite ongoing low-level fighting.
If
the result is not sufficient in our opinion, we will reserve the right to respond at another time. Let the people relax. Whoever wants to go back home can go back home. The country must calm down again.
From Dubai now, let's bring in Bloomberg's anchor, Jemana Basetchi, for an update on what is happening here. How does what happened with these attacks change the nature of our expectations vis-a-vis the Israeli-Hezbollah conflict? We've been waiting to see whether or not it was going to erupt into something more significant. Did the weekend's attacks change the calculation?
I think that is the number one question, Guy. And you heard from the man himself there. That was the Secretary General, Hassan Nasrallah, Secretary General of Hezbollah, speaking after the attacks yesterday, saying people can relax. People can go back home. The first phase of this operation is over. And I think if we had spoken 24 hours ago, the region might have given you a different perspective. But today, the feeling certainly is that once again, we got very close to an even bigger escalation, and yet that didn't pan out. And what we have seen is a series of retaliatory attacks. You saw a strike, counter-strike. Israel obviously intercepted thousands, what they say thousands of rockets that could have been fired onto central Israel because of that preemptive strike that they did on some of Hezbollah's rocket launchers in the early hours of Sunday morning. Hezbollah themselves are saying that the phase one was a victory on their part. They attacked the military infrastructure that they wanted to attack, but crucially, they didn't go out of their way to attack any civilian targets, i.e., it could have been a lot messier, but they decided to keep it calculated and controlled. And what we saw is very limited casualties and infrastructure harm on both sides of the fence. There was one Navy soldier that was pronounced killed in northern Israel. And what is interesting that on the back of this, Hassan Nasrallah did give that speech, heralding it as a victory, but also saying that this part of the retaliation phase for the killing of Fuad Shukr is now over. And even Israel, which 24 hours ago declared a 48-hour state of emergency, the Tel Aviv Stock Exchange actually closed up on the day. So once again, we did see an escalation that has resulted in a broader de-escalation for the time being of that northern border between Israel and Lebanon.
Is there an impact? Is there a read across into the Gaza peace talks?
Well, what's interesting is even a couple of hours after those strikes took place, an Israeli delegation did head to Cairo to continue with discussions with the CEI director. He was there, the Egyptian intelligence chief, and of course the Qatari PM. Those are the three main mediators we've seen pushing with those discussions. A Hamas delegation also flew to Cairo as well. It's unclear whether they were actually in the room where the discussions were taking place. But it is notable because the messaging from Israel is that even though these strikes and counterstrikes took place on Sunday morning, it isn't going to impede their ability to continue on with these ceasefire discussions. Now, as we've been talking about over the course of the last week, the U.S. have been pushing very aggressively to get the ceasefire deal across the line. It even came up in the DNC. Kamala Harris was talking about the focus of the Biden administration to get to a ceasefire. But the main sticking point seems to be now the fact that Israel wants to maintain a military presence along this Philadelphia corridor, that is the border separating Gaza from Egypt. That is an element that both Hamas and Egypt are uncomfortable with. And so it is unclear at this point whether they can come to some form of an agreement whereby all sides are happy and at the same time secure the release of hostages that many within the Israeli public have been pushing for since October 7th. So there's a lot of internal domestic pressure building on Netanyahu and indeed international pressure building to get this ceasefire agreed to. At the same time, Hamas, from their perspective, there's been a couple of change of political leaders over the last couple of weeks or so. Unclear at this point what conditions they would need to see in order to feel like their own needs have also been satisfied as well, because what they've been pushing for is not just a truce, but a full cessation of hostilities. So at this point, it doesn't seem like a breakthrough is imminent, but the discussions are still ongoing.
And I guess the last question revolves around Iran. We saw what we saw over this weekend. Iran must be obviously factoring that into its thinking. We've been waiting for this Iranian response, and I'm wondering how it therefore changes the calculation to what Tehran does next.
So if you rewind back to almost a month ago, it was the same evening where the senior commander in Lebanon was killed, Fuad Shukr. A couple of hours later, Ismail Haniyeh also assassinated in Tehran. Remember, he was there for Pezeshkian's inauguration. That was the new Iranian president. So these twin assassinations happened on the same evening. And ever since then, we've been hearing from the likes of the supreme leader, from Pezeshkian himself, from Hezbollah Secretary General, from other proxies in the region saying that they are vowing retaliation and that these killings would not go unnoticed. They would have to respond somehow. But what became apparent over the course of this weekend is that Hezbollah acted unilaterally. This was not a joint effort. We did not see a three-pronged approach. We didn't see Iran, Hezbollah, and other Houthi militias acting all at the same time. And so that in itself is quite notable because in the end, Hezbollah had to react unilaterally. And it does tell you that even though Iran had been talking about some form of a retaliation, that it will be harsh, at this point, there doesn't appear to be an appetite to escalate this even further. And so there is an expectation that they will respond somehow, but that it will be calculated, especially given what we were just talking about, those ceasefire discussions are still taking place. So if they do get to a ceasefire deal, that again would help bring down some of the temperature in the region. And that is what Iran seems to be banking on at this point.
Joanna, thanks for the update. Always appreciate it. Thank you very much indeed. Bloomberg's Joanna Basetchi joining us on the latest in the Middle East. Let's talk about the energy market reaction to all of this. We're joined now by Bloomberg's energy reporter, Carrie Lundgren. Carrie, I'm not seeing much reaction in the energy market. Walk us through the connection currently between tension in the Middle East and how the oil market deals with it.
Well, I think right now the story of the past few weeks has been that past few months is that there's been a bit of oversupply, and everyone's looking to what OPEC Plus is going to be saying in a few weeks' time. It's interesting. I'm standing here in Stavanger. I have had in the last few minutes the CEO of Equinor pass me. The Crown Prince is here, the Prime Minister. Outside are a bunch of oil protesters. But I mean, in terms of demand for oil and enthusiasm for oil and gas, that seems to be going strong on this end. No concerns.
Okay, so there's still a sort of demand story. I'm starting to see a pickup in nat gas prices, though, for Europe. Talk us through the dynamics around that, because in some ways that's more meaningful for the European economy.
Yeah, definitely. I think we saw a little bit of a drop off in the natural gas prices at the end of last week as sort of the concerns about what's going on in the Ukraine have eased a little bit. There's a feeling that the maintenance that's going on in Norway will go to plan. And so the supply there seems to be relatively stable, and that seems to be giving traders a little bit of comfort.
In terms of what we're seeing, as you say, it sounds like you're right in the thick of it in terms of what is happening with Norway. We are seeing some outages, though. The market, isn't this something that the market has to regularly deal with? Why is the market so nervous about these maintenance outages?
Yeah, I think it's a good question. I feel like I encountered a lot here. I speak to the CEOs and executives that are sort of dealing with this, and they're sort of saying, well, this is business as usual. We've been planning this for years. But I just think Norway's in the spotlight as never before. I mean, you have a quarter of gas supplies coming from Norway now. And so when you start having maintenance on the shelf, then suddenly people pay attention to it in a way that they never did before. And you have enormous facility here, Kårstø, that's coming off for almost a month. You have the Troll natural gas field, which is a huge supplier of gas to Europe. And so like earlier this spring, we saw there was an oil platform or a platform that had a small pipe that had a problem. And it was a small pipe, but the whole market is when a pipe and a problem with pipe comes up, they're thinking Nord Stream, they're thinking terrorism, they're thinking all of these things. And so over time, that information came into the market. It was a small pipe. They were able to repair it. But then even then you see, you have, and you have the North Sea, and that's always challenging. But back to you.
Okay. Kari, great stuff. Really appreciate it. Kari Lundgren joining us on the energy story here in Europe. We are obviously watching carefully what is happening in the Middle East, but it does seem as if it's a supply story that maybe is having a bigger effect right now. Coming up, we'll talk about this from a different angle. Tension in the Middle East. Maybe slightly sort of overshadowing a little bit the positivity we got from the rate cut story coming out of Jackson Hole. We've obviously seen significant dollar selling Friday into Monday. We'll talk about whether or not the euro maybe has gone too far. Sonja Marten from DZ Bank is going to be joining us next, DZ Bank. We'll have that conversation about the FX story related to the rate story. We'll do that next. This is Bloomberg. Welcome back. You're watching The Pulse. So a quiet Monday gives us an opportunity to digest what we learned Friday out of Jackson Hole. The headline, certainly a signal from the Fed Chair Jay Powell that rate cuts are coming in the United States. But I would add to that, I would add the caution that we heard from maybe some ECB speakers about how fast the ECB can go when it comes to cutting rates. Now, we've already obviously had one rate cut from the ECB, but there seems to be a sense that maybe the stickiness around the inflation story may mean that the ECB goes a little bit more slowly. And maybe that accounts for the fact that we saw significant dollar selling Friday. Euro dollar, some fairly big moves Friday. We're fading those a little bit this morning. But how much more should we expect in terms of euro dollar, which is now trading at 111.81? Joining us now to discuss, Sonja Marten, head of FX and monetary policy at DZ Bank. Sonja, great to catch up. Did the move Friday against the dollar go too far, or do you think it was on point?
I do think it's gone too far. When you look at what's happening in the US, I mean, people are obviously very concerned about the possibility of the US economy falling into an outright recession. This was triggered, as we know, by the last labor market report. And since then, we have really seen a major shift in sentiment vis-a-vis the US. I mean, you can really tell how data is interpreted. in a different way. People are taking a different angle, looking for the spots of weakness rather than focusing on the good bits. So there's been a significant shift in sentiment going along with these very aggressive rate cut expectations for the Fed. I do think at this point the dollar move has gone too far. I think it's not justified by fundamentals or what the Fed is likely to do. Having said that, I'm also a bit reluctant to say that this has been it, simply because I think we may take some hard evidence that the US is actually not faring that badly. And we may have to wait for the next labor market report, which comes out on the 6th of September, before we get some new information.
I'm starting to read reports of the dollar becoming a funding currency. What do you think of that?
Okay, that would require, I think, considerable more rate cuts from the Fed than what we're anticipating. So I'm not convinced of that argument. And there are still plenty of other currencies around that you can use that have much lower interest rates. But you know what we are seeing, it's interesting that you mentioned this, because we have seen this happen again and again in last year as well. People suddenly sort of very much turn against the dollar. And while I think this time around there's more justification to be a bit more cautious, it tends to happen very quickly and very radically, and people sort of rush off in one direction, and I think it becomes a bit one-sided.
Let's look at it from the other side of the pair. The data out of the Eurozone, I hear the ECB officials talking about their concern around inflation, but I've just had a conversation with the IFO's Clemens Fuest, and he's talking about a really dire picture in Germany, and Germany in desperate need of lower interest rates. Is your sense that, again, that we're overdoing this expectation that the ECB is going to hold off because inflation remains a concern? Is that narrative also being overdone?
Yes, I do think that it is overdone. I mean, what we're looking at from the ECB is some very cautious policy easing. We're looking at one rate cut per quarter, so they're not moving very fast, and they have ample time to allow the inflation rate to continue to come down towards their target. I mean, most of the major central banks currently have the problem that their inflation rates are still above target, and they can only cut on the expectation that inflation will continue to come down. So they all have to tread quite carefully, something that we're currently forgetting when we look at the Fed. The ECB is on track to cut, and the latest data, I think, on wages was quite encouraging. So I think the ECB is on track, but you have to be careful not to overstimulate market expectations, because that can basically come back like a boomerang, and result in surging inflation expectations, which will make cutting more difficult. So they have to be a bit careful, right?
Do you think there's a danger that Powell's doing that? I remember December last year, Powell set the market up. Everybody got terribly excited. We priced in loads of rate cuts. Those rate cuts didn't materialize. Is this time different?
It is a little bit different. I think back at the turn of the year, it was completely ludicrous. I mean, the market was expecting 160 basis points in rate cuts, and the Fed was supposed to start in March, and there was absolutely no fundamental reason to do that. I think it's different this time around, because this time around we are seeing some weakness in the labor market. We have seen the data in the US deteriorate. We are seeing a slowdown. The inflation rate has come down. So, there is now the evidence that the Fed needs to cut rates. But I think the expectations that we saw quite recently, I think it was up to 125 basis points by the end of this year in 3 meetings. That is definitely overdone, yes.
So where do we go from here? What kind of ranges should we be thinking about? Let's talk euro dollar.
Well, I think we're probably going to need some evidence, as I said, to see that the U.S. economy isn't faring that badly. And I think we could, if that happens and when that happens, I think we can see quite a quick turnaround. And then suddenly everyone's going to remember the one crucial factor that they're all ignoring right now, which is that the euro has no business being at 112. Never mind the dollar story. But, as you said, the data in Europe is quite dismal, particularly in Germany. So, we're not supposed to be here. So I think we can see when it happens quite a quick turnaround. We still have a forecast at 108 and we haven't changed it. Obviously, I'm feeling a bit more nervous today than I did a few weeks ago, but we haven't changed it. And I still think we have the potential to pull back until then. And then, at some point, inevitably, someone's going to ask me about parity again. So that's going to happen.
But you certainly, the price feels really wrong right now. Let's say it's 108, 109. Let's say it's somewhere around there. The price feels.
Yeah.
So it's just what I'm just wondering. You talk about September the 6th. Is that going to be the first catalyst? If we only get 25, is that the point? If the first Fed meeting only delivers 25, is that the point? When do you think that kind of light bulb moment is going to be, and we start to change the direction?
Well, I mean, I think we've both been in this business for a long time, so we both know that predicting the light bulb moment is very, very tricky because market sentiment can change unpredictably from one second to the next. I would say that September 6th, so the labor market report, is crucial. If we had a distortion in the last report because of the hurricane, then we should find out about this in the next report, which could then be quite strong. So that's definitely the big moment. And then I think the 25 basis point cut, in September, no huge discussion about 50. I think that's another trigger.
Yeah, you get a strong payroll report. It's really interesting. Powell set us up for a rate cut. You get a strong payroll report. Life could get quite interesting at that point. Sonja, great to catch up. Thanks for joining us. Really appreciate it. Sonja Marten, Head of FX and Monetary Policy, joining us from DZ Bank. What are we going to talk about next? How a series of failures, missteps and lost opportunities led to the global Mpox emergency. That's today's big take. We'll talk about it next. This is Bloomberg. Mpox, a global health emergency that scientists say could have been avoided. We've missed opportunities. There's been a lack of funding. It's caused the spread of the virus in Central Africa. Joining us now, Bloomberg's healthcare reporter Janice Q in Johannesburg for an update on today's big take. How could have this been avoided? Where were the missteps?
Guy, there was a global health emergency declared for Mpox in 2022, and when that ended in May of 2023, Africa still hadn't received any vaccines. And I will just note that that was a milder strain of Mpox, the previous global health emergency, and that's probably the most crucial misstep. It's really just inaction and almost an inertia around emerging diseases in Africa. I think that's probably the main thing. Surveillance and testing is low. And I think if these had been in place much earlier, we may not have seen this mutate.
Yeah, and the mutation is the critical thing, because the mutation is what we are now worried about. So what's being done, again, kind of where have the missteps around the mutation been in terms of containing it?
The Congo is a particularly difficult area to work in. It's a country roughly the size of Western Europe. It's war-torn. It's got the world's second largest tropical forest. And so that's been part of the problem. It's difficult to get even some of the basics like water for washing hands, and public messaging has not been an easy thing to get out. There's been stigma around this disease. This particular time with the mutated version, we've seen a lot of children infected, and that's often misdiagnosed as chickenpox until parents or caregivers get the children to a facility. And so all of this has delayed, and I think the big messaging here has been if there were vaccines a year ago or earlier, we might not have seen this rapid increase.
Janice, thanks for the update. Thanks for the big take. Really appreciate both. Janice Q joining us from Johannesburg. You can read the big take on the Bloomberg today. Coming up a little bit later on, San Francisco Fed President Mary Daly is going to be joining Bloomberg. That's at 7 p.m. UK time. Up next, Manus Cranny with the brief. Manus, over to you.